Welcome back to Invest in a Moment, the podcast where we break down big market themes and money decisions in a way that fits real life. Whether you're saving for a home, planning for a family, or building your retirement fund, every moment matters, and so does your investment choice. Today's episode, we're asking one simple question. We're now in 2026. What happened in 2025 that we can really ask investors what should they look forward to this year and what has been the key takeaways from 2025? And joining me today, we have a very familiar face. We have Amir back in the studio. Amir, welcome back.
Okay, thank you, Matthew. Thank you for inviting me again. I remember that we have a very good discussion in the last session. Today, we have another very interesting discussion. We discuss about what happened last year and what would happen this year.
Yeah, I'm definitely looking forward to hearing your thoughts about last year, how that affected you, and what's happened this year in 2026, and maybe give an outlook of what potentially could happen this year in terms of financial investing, in terms of investor behavior, and we'll get into those details. But as always, I want to kick off with the little icebreaker question, right? Something to gather your thoughts and also see how you feel, your opinion, right? So if I could just kick off, what is one word or a few words in your case that you could use to describe markets in 2025?
Basically, market in 2025, I describe it as chaos, but not chaotic.
Okay, interesting. Why is that?
Okay, if you look at the year 2025, there's a lot of event, right? We started off with, you remember, DeepSeek?
Yes, we did.
DeepSeek caused a lot of headwinds, right? Basically, a lot of tech stock have been sold off just because of the DeepSeek. At the time, when DeepSeek first started, they said DeepSeek doesn't require expensive and high-end chip. So basically, if you say, we don't longer need Nvidia, we no longer need Intel because DeepSeek can actually produce AI with just a fraction of cost. That what basically happened. So we see a lot of sell-off. Then, remember, DeepSeek was launched on 20th January. It's the same day, actually, Trump become a president of US for the second time.
Yeah.
Yes.
Yeah. And what
And he
happened there?
started a lot more chaos after that, right? So he started with fentanyl. Remember the fentanyl tariff on Mexico and
We
Canada.
did talk about it.
Right.
The whole trade war. What's gonna happen in the market?
yeah.
That was very early along in the year.
Then in April, the big one actually coming, basically what he called as Liberation Day. That was the worst market sell-off throughout the year, right? In fact, year. And May to July, we have 3 wars, remember? Iran, Israel, India, and Pakistan, Cambodia, and Thailand. So then in October, we have another, I think, event that's slightly mild, actually triggers some of a correction in technology stock. Basically, people actually comparing current AI rally equivalent to what happened in 2001. And we have what you call tech bubble at the time.
Yeah.
So we have some sell down in the technology stock. Basically, the whole year was, you look at the headwind, was so chaotic, right? But in end, you look at the market performance, last year, basically, market still went up more than roughly around 20%, right? That what really happened. Basically, if you look the whole last year, chaos, but not chaotic. That should describe the whole market for throughout 2025.
Actually, I like that you said that. Chaos but not chaotic, because if you ask me, I'd say the one word I use to describe is resilient. Right? You know, with all these real life events happening, affecting markets, affecting investor behavior, you know, affecting all these different decisions people make about, hey, is this now the right time to invest into the stocks, or is it the right time to invest in tech, for this example, right? And obviously the rise in AI. But even after all that, in my opinion anyway, I feel like 2025 markets have been so resilient in a way that investors are so-called, how do you say, brave through the storm, right? And look where we are right now, right? And this is a part of what we're talking about this year in 2026, what the outlook is. How has 2025 events sort of impacted growth last year, for example? And then how does that carry forward to this year? Especially when a lot of these market conditions are a bit more, how do I say, unpredictable. Now, you never know what's going to happen. And how is that going to affect investor behavior?
Okay, if you look at 2025, right, you see there's a lot of event. There's a lot of things actually from 2021 will be carried over in 2026. For example, Trump tariff, right? You see, I think this year there's a lot news about tariff already. We saw that the first one, tariff on Greenland, right? Trump want to impose up to 25% to EU country who do not agree with him to take over Greenland. Then he imposed another tariff to country that buy oil from Russia.
Yep. Yep.
Then recently he want to impose 100% tariff on Canada because Canada actually signed a new trade agreement with China. They signed on, I think, on 16 January. And just this morning, I think a few hours ago actually, Trump actually announced they want to raise tariff for Korea
Oh,
for another 10% from 15 to 25%. They said Korea is not honoring the trade agreement that they signed earlier. So, so the tariff had been continued. But the new event that actually, you can see that actually caught investor I think over recent week is the strengthening of Malaysian ringgit.
I did see that. I think one of the key points, I think it was 3.99.
3.99. Can you
3.99,
imagine?
yeah.
Nobody believe it. There's quite a number of economists actually discussed that actually is something to do with improved economic outlook of Malaysia. I think that one of the factor, but it's the mild one. I think the real factors actually relies on commodities.
Right.
If you look in terms of performance of currency last year, right? Ringgit actually outperformed US dollar roughly by around 9.9 to 10%. So you look across the board, actually, all commodities currency actually outperform US dollar. So in that sense, right, commodities tend to inversely correlated with US dollar because commodities always reflect what you call it high risk and growth oriented. So US dollar tend to perceived by investor as defensive and resilient. So whenever commodities turn up, US dollar tend to go down. That always be the case. Malaysian currency actually move toward what you call commodities currency because we have palm oil. We actually net exporter of crude oil. That's why I think the main reason for ringgit to appreciate against US dollar is basically commodity. In fact, if you look currency that actually outperformed ringgit last year, basically Brazil and South Africa, the two countries with a lot of commodity. Brazil have almost everything like from metal to soft commodity. They have soya bean, they have iron ore. In fact, you look South Africa, there's nothing to argue because their economy is highly exposed to precious metal like platinum and gold.
Interesting. So, having said that, as we flow into, you know, that was a nice little introduction and summary, right? As we ease into this topic, as we say, hey, 2025 in review, what actually moved markets in 2025 or last year, and how is that impacting right now? So, as you mentioned, some of the key drivers were trade tensions, tariffs, Trump, renewing tariffs or increasing tariffs, right? And impacting, how has this impacted major economies? You look at interest rate, you look at inflation, political uncertainty, policies, geopolitics, and the rise of AI technology. And right now, as you mentioned, looking at global growth and regional growth between US, Europe, China, or even Asia in emerging markets, right? So, as you mentioned, if I describe 2025 for investors, you already mentioned that, hey, it's chaos, but not chaotic. And I said it's resilient, right? And looking at it now, we saw a lot of, let's pinpoint a certain economic or geopolitical event, right? If we say we had several regional shocks, right? We had US-Iran tensions to the friction between India and Pakistan. Why do you think markets move so quickly back to their core fundamental drivers?
Okay, basically, if you look, let me comment on the war first. Basically, last year we have three wars, right? We have India, Pakistan war, we have Cambodia and Thailand, Israel and Iran. Okay, basically, if you look, the war that come before these two war, basically Russian and Ukraine. Russian and Ukraine is so much different compared to these three. Because Russian and Ukraine is a huge commodity producer. Basically, Russia and Ukraine is the number one and number two producer of rapeseed. And remember, Russia is actually the biggest supplier of natural gas to the Europe at the time. So there's a lot of what I call affecting a lot of supply chain. That's why you see in 2002 we have inflation actually spike up. In fact, US inflation goes above 9%. So if you compare all the three wars in 2025, nothing would affect supply chain. Iran have been on US sanction for so many years, right? And India, the length of the war actually quite short. Basically, they end up, I think, lasting around 10 days only, similar to Israel. Thailand and Cambodia actually confined to only area around the borders. So what actually key that drive the market, basically, people misunderstood how complex the economy is. You can see that there's a lot of trade war. People talking about trade war. Trade war basically only affect the goods, physical good. You know what I mean? So if we mean physical good, it's different. If you look at the global economy today, right? Global trade or physical good only make up about 1/3 of total global economy. Another 2/3 actually is a service economy. Service, you know what is a service? Service basically, you know that company like MYTHEO is a service company. Banking is a very huge service sectors. Then we have IT, we have healthcare. So when people focus on tariff, people forget, oh, tariff only affect 1/3 of the economy. Then there's, because you know that all the economy, they have their own expert. When they have this tariff, they always have find a way to actually to bypass, how to eliminate or to cushion the impact of the tariffs. You can see that one of the indicator you can see in the market today, you can see right, not that shipbuilding industry or logistic industry, shipbuilding industry, basically the maritime industry, have not been moving for so many years because of oversupply, weak fundamental. Suddenly the freight price rates going up. You see a lot of shipping companies saw their share price actually double or triple last year. Why? Because there's a lot more rerouting happening, right? You know, China gets sanctioned, they route their goods to other country, just erase all the made in China label and export it back to the US. That's why you say economy becomes so resilient. In fact, US announced GDP growth of 4.3% is very much mind-blowing, right? Then what support that argument? You can see China trades plus 1.2 trillion is another record year for them. I mean, tariff doesn't really affect them. In fact, Malaysian economy also stay resilient. We just announced GDP growth of 5.7%, right? See?
So all this tariff talk in the beginning was really just, obviously we haven't been in this situation before, and looking at what you just mentioned, it's just been so resilient, and in fact it's been better, right? Growth has occurred. So from MYTHEO's perspective, coming back to this topic where, let's say, US equities, right, they developed a solid return, right? And but were they actually the top dog, so to say, of 2035? And who, in MYTHEO's opinion, I guess we like, when you were doing your analysis and looking through research, who were the true standout performers globally?
Okay, basically, if you look in the past few years, basically, the market always been driven by what we call the Magnificent Seven or the big tech company, right? And US market, because of this Magnificent Seven, US market did very, very well. Only last year, thing has changed. So when people look in the perspective of AI, people start broadening the horizon of investing. Basically, when you look big tech, they suddenly find that in order AI is not just about cheap. You know, remember last time people invest in AI because of cheap. Cheap, basically they only focus on Nvidia, they focus on AMD, they focus on Intel, and they focus on TSMC. Now they are talking about, oh, there's a huge data center. This data center need a lot of power, right? So then this data center need a lot. You can see there's a rally in what we call renewable energy, because we know that even though Trump is not really leader that actually promote green energy, but the corporate, yes, because they want to attract investor. So they still think in order for them to get more energy is through renewable energy, not a conventional coal energy, right? So you can see uranium rally by 62% last year, lithium, solar and wind energy rally by at least 40% last year. Then the another team actually come up, actually the bigger one, basically Korean market. Last time people only look at the chip. Suddenly people like, oh, we need, suddenly the word HBM become popular. HBM basically high bandwidth memory, basically your RAM in your PC. That's what do.
Yeah.
So you can see that last year Samsung Electronic really almost 100%. SK Hynix basically almost 300%. Basically, these are the two largest player in HBM sector. That what actually happening last year. And one thing to note also, in the commodity sector, you have this what you call metal. And unlike previous year, people only focus on gold, and another gold. But this year is slightly different. People start to look at silver. So basically, if you look at silver actually have more industrial value compared to silver. You know that silver is, what silver has been used in the electronic sector, basically your kettle, because basically a small thing with two legs inside your PC or inside your TV.
Oh, like the small component
Yeah,
parts, right? That.
yeah.
Oh yeah, okay.
Yeah.
That's silver, sure.
That was silver. Basically silver, more silver coming from byproduct of mining gold or mining copper. So basically it's the same people that produce gold, copper actually produce silver. So what happened to silver? Silver market actually had been in deficit situation for such a long time. So over the past few, because of incentive for renewable energy, silver have been used a lot in what you call renewable energy, such as solar and wind energy. So I think solar and lithium basically. So that actually driving silver price higher. And platinum basically used a lot in your diesel car basically. So this new technology have been developed in Japan, try to develop what you call hydrogen car. Hydrogen car might use a lot of platinum. Platinum have been in deficit status since I think 3 years ago. So for lithium is a surprise one. If you read a lot analyst report, because there's so many demand for lithium, there's so many people actually start mining lithium. So because of that, lithium have been in a oversupply condition for so many years. If you read headline, you wouldn't buy lithium. Out of sudden, lithium still rally and follow suit. That's why this year is much more different. It's much more broadened. In fact, the rally has moved away from just concentrated in the US market. Korea was the best performer. The other country that performed better than US include Brazil, because they have a lot of metal. Same like South Africa, they have a lot of gold and platinum.
So what you're trying to say, if you're telling me right, I think that in a nutshell, other metals like silver or lithium, considered metal, lithium, silver has outshined gold, right? And I think you give a very good example of how, I guess, different commodities are treated differently or can be invested differently to show growth in the most unexpected ways. Like, did you buy silver?
To be honest, until today, nobody talk about buying silver. Only recently, I received a lot of WhatsApp, a lot of
questions.
I say, hey, we have to buy silver. I mean,
Yeah,
we have to buy silver.
exactly.
As Malaysian, it's very difficult for you
Yeah.
to buy silver.
Yeah.
That's why you have to invest into other market. By contact, you see that Malaysian market today, we have only roughly around 1.2 or 1.3 trillion in market, 1.5 trillion, roughly around 500 billion US dollar, right? So compared to global market cap, roughly around 122 billion US dollar. So that's why you need to start investing globally. MYTHEO provides such platform, right? Because Malaysian market only less than 0.5% of the global market. There's a lot more opportunity outside Malaysia.
So, having said that, moving on to the next sort of topic, let's talk about MYTHEO in particular, and MYTHEO portfolios. If you could give me a summary right now, let's just, to kick things off, in 2025, how did MYTHEO portfolios perform?
Okay, basically, we have 9 portfolio altogether. 6 actually we open to public. We have 3 more portfolio actually we have partnership with other parties. So almost all our portfolio actually deliver positive return in US dollar. In fact, some of the portfolio deliver return as high as 26%. If you look in US dollar term, our return is the best ever since our inception in 2019. Basically, because we have all this exposure, right? We have exposure into not just into US, even though we know that MYTHEO only invest in US exchange. But you look into detail that our underlying basically have exposure into, we also have exposure into Korea, Taiwan, Brazil, South Africa, the market that I said perform very well. In fact, we are one of the few house actually, that invest in almost all precious metal. You can buy a lot of fund in Malaysia that actually invest only in gold. You look at MYTHEO funds, some MYTHEO fund also invest in silver, and we also have investment in platinum. That's very, very rare in Malaysian market. That's why you need to look at MYTHEO platform.
So MYTHEO portfolios have a significant allocation to other assets, right? And as you mentioned just now, maybe you could pinpoint how has that contributed to the performance of everything in general, from MYTHEO portfolios to a diversified basket or even different portfolios of ETFs.
Okay, basically, if you look at our portfolio, we have what you call core portfolio, omakase portfolio, and we have what you call satellite portfolio in the form of ESG, essential, and MYTHEO is DIHAR. Okay, I want to highlight first on equity portfolio, we have growth and ESG portfolio. That's the main two. If you look, this portfolio mostly invest basically in global stock, mostly have high exposure into AI sector. So US market have been doing great last year. In fact, it contributed the performance of the fund. But what makes these two portfolio have extra alpha, what you call extra return, basically because we actually have exposure outside US. Basically, this portfolio also invests into what you call Samsung and SK Hynix in Korea through what you call Pacific ETF. Even though we highlight this equity portfolio, you can see that the best performing country within these two portfolio basically Canadian. Canadian market actually went up by 35% last year. You know why? Because Canadian, they have very high component of gold. There are quite a number of gold mining company, a big one like what I call Newmont Gold and buried gold. So I think roughly about 15 to 20% of Canadian market actually make up by gold companies. We also have some exposure into South Africa through what you call emerging market exposure. Basically, South Africa, you know that the top six out of top 10 companies are gold mining or platinum mining company. Even though it's a equity portfolio, we still have exposure to gold miner. So then we have inflation hedge portfolio. Inflation hedge portfolio, as you well aware, basically we have a direct exposure into gold and silver. Basically, gold and silver contribute roughly around 20% of the total portfolio. Then I think the best performing portfolio is the portfolio that we have partnership with Kenanga, called Kenanga Global Real Asset Portfolio. We launched this in July, So we are the fund manager. Kenanga distribute the portfolio for us. So this portfolio since July, in ringgit term, and went up by 26%. You know why? 42% of this portfolio comprises of precious metal. We have both. We have all the three metal: the gold, the silver, and the platinum. That the key driver for this portfolio.
Okay. So basically everything went up, right?
Everything went up.
So-
So that's why when you invest in metal, you can invest almost everything.
Everything, right? It's great stuff. So going back to for our new listeners or our viewers out there, could you give us a quick summary of the strategic differences between an algorithm-driven approach or human emotion? Something that MYTHEO really strikes on, as you said, the omakase is your gold standard of the portfolio, right? How
Firstly, I want to highlight that algo doesn't have emotion like human. We have so many negative headwind last year, right? Tariff, war, and even people actually said what you call AI bubble. If you are human, you are tempting to sell. But algo continue to stay consistent, continue to invest all the time. So we move away emotion from the algo. That's how we actually maximize return to our investor. The second thing that different algo with human, right? I have been human fund manager for the longest time. You see that human, then they tend to invest something that popular, something that pop up in the headline. For example, today everybody want to look at gold. Last year everybody want to look at Nvidia. Now you look at my portfolio, we still end up exposure into lithium, exposure into renewable energy that nobody look at. I think 6 months back, because algo actually can scan everything and they look at they just try to adjust to make sure that our portfolio is adjusted to get the best return out of the risk that you take. So it can. That the biggest limitation to human being. We only focus on a certain cluster, the portfolio idea that been thrown to you. But that's not the case by algo. They always scan for all asset class all the time automatically.
No, for sure. I totally agree. I think that the key takeaway here is that if you're saying one thing we can say is that by the time you hear about it, it might be too late already.
Yes.
Right?
Yeah, you're right. You are right.
That's when everybody's already in. Like how you in a position to leverage on something that's emerging when it's already been established. So
That's why everybody tend to jump on the same idea at the same time.
how are you gonna stop everybody, right? By the time you hear about it, it's like, oh, everybody else is doing it, so I should go in too. But that doesn't necessarily justify returns or a sound strategic investment, right? You bring a lot of emotion into the hype, into being like, hey, how do I say, herd mentality, right? Hey, my friend said this is damn good.
Yeah, you are right.
Let me go into that too, right? And then it may end up backfiring because you don't do your own research, you have maybe no experience, or you're just following the trend, right? All of which can have a potentially negative outcome, I want to say, right? So we've been talking a lot about 2025 and the impacts of all these events, right? Last year. Now in 2026, we are now towards the tail end of January and time moves so fast, right? And in your opinion, what has spilled over? What are the key events to watch out in 2026?
Okay, the first one is US politics. Okay, you know that when Trump announced tariff, the tariff actually has been called illegal by two lower court, right? The first court is Court of International Trade. The second court, after that court actually rejected the notion that tariff is legal, Trump actually go to the appeal court of appeal. Also, he lose. So now it have been tabled, discussed in what I call Supreme Court, and decision will come out soon. So what happened is Supreme Court actually decide, oh, the tariff is illegal, so everything will reset. So market will really significant. The second one, of course, on US politics, basically is US midterm election will be happening in November. You can see that today today, US, they got this what you call House of Representative and Senate. Both are controlled by Republican. Whatever Trump want to do, Republican is Trump party, so they will approve it. So what if actually Republican actually lose the midterm election? So it can cause a lot of thing delay with a lot of thing, and it's going to be very positive to the market. If you can see, right, Zora Mondani from Democrat with New York mayor, that should be a reference how popularity of Republican has dropped. See, then the next one, of course, AI. People said AI is in bubble. I don't think so, because if you look over the past few years, AI investment only focus on infrastructure. Basically, people buy Nvidia, people buy AMD, people buy TSMC because they supply chip to the data center, right? Then people talk about renewable energy because they need energy actually to power up data center. So what else after data center?
Correct,
Is
yeah.
actually the AI provider itself, company like OpenAI, company like Google, company like Microsoft. Because you look at ChatGPT was launched in 2022. Basically, since 2020, you and me, we have been using ChatGPT for free, right?
I'm not gonna lie.
I mean, you
ChatGPT
probably,
is
we had
a-
never paid a single cent, right? Only last year they start to introduce the package they got. Today they got free account,
the pro
they got
account.
Pro, the plus account, the ultra account,
yeah. How
and
fast?
now you start paying for this service. Now it's monetizing.
Monetization, for sure.
This monetization. So that's how Google start making money. That how OpenAI start making money, and that how Microsoft through Copilot start making money. Cloud start making money. And one thing to highlight also, this year there will be a lot of what you call IPO event involving AI company that actually could drive positive market sentiment. AI is last year rumored to be seek for initial public offering. Basically, now they are private company. They will become company that listed on exchange this year. Cloud, Anthropic, right? Basically, the parent for the cloud is Anthropic, also expected to list this year. I'm positively sure that OpenAI and Anthropic, they have to start this thing because they need money. Basically, you see last year, OpenAI actually strike deal with Oracle, right? 300 billion US dollar over 5 years. We mean they need to pay Oracle 60 billion US dollar a year. How you want to get money? The only way is to go IPO,
Monetize your
sell it to the
solutions.
public, create new share, and get that money and to serve the contract. So that's why I'm still bullish on AI sector. I think say AI last year is only focused on what you call infrastructure, and this year is focused on the real thing, the monetization of the AI service itself.
Okay. I think there's a lot of things I want to just digest into what you said. There's a really good explanation and a whole breakdown, but there's a lot of key topics. Let's digest a little bit. May take a step back. Let's talk about going back to what you said. One of the biggest events that you mentioned is the U.S. midterm elections in November, right? You mentioned how this affects the public consensus, affects the general public, and affects markets. But as an investor, why does this matter?
Okay, in investment, you have to understand one thing, right? Most of the time, we have 365 days a year, right? So the trading days, we have 5 days of trading. We mean we have 250 days a year. Actually, only a few days with supernormal return actually reflect the performance of all investors. It's not okay. Roughly around 10 to 20% of you being in the market matter rather than the remaining 200 days. The problem is you don't know which is that 10 or 20
What are
days,
your 5
right? You
days
don't
for
know. You don't
returns?
know.
Yeah.
That day could be the day that with significant event. That day could be the day that actually Republican lose midterm election, because it's a very big thing. Because you know that when Trump come into effect, all his policy caused a lot of chaos, not just in the US but also globally. So when they say, oh, if Republican lose, it's very difficult for Trump actually to implement all this chaotic policy, right? So in the term of investment, we always call that risk premium. When risk premium start to shrink, people believe, the risk now lower, the stock market valuation went up. That's why midterm election is matter a lot because of what you call tailwind risk.
So I'm also glad that you touched point on the AI sector being a bubble. As you mentioned, a lot of people, how they monetize on their solutions. What are the biggest winners? You have OpenAI, you have Google, Microsoft, The selling pressure has been seen in late 2025, and it is natural motion, right? The natural period of profit taking after a prolonged rally rather than bursting a bubble. So the question is, are AI sectors really in a bubble, or as you mentioned, you're quite bullish on it? Also, and looking at large companies, like you said, are becoming even more dominant because they have the deep resources, the specialized technology, the IPs, the top talent, and this only just increased the competitive landscape, right? How are companies adapting, and how has this sort of affected markets or investor sentiments?
Okay, I think you asked a lot of question. I try to break out to several
Yeah,
part of
yeah.
that question. Okay, the first one is AI in the bubble. Okay, let me went back to the year 2001. Basically, in 2001, I still in universities. But during that time, I already opened a CDS account. I already start trading. I remember that year. That year, I have one friend actually bought a company called, I think at that time called Sapura Technology, is something like a telco company. He bought around, I do remember around 128 ringgit Malaysia, RM28. Then 1 month later it becomes 16 bucks. There's a lot of company like that in 2021. Remember Nation Pacific Industry MPI was trading around 54, 55 ringgit. Unisem was trading around 45 ringgit. You buy at that time your investment strategy just list down all the technology company in Malaysia. You put it on the wall and throw the dart. That is your strategy. Right, basically everything went up threefold or fourfold within a month. Right, it's in Malaysia, it's in Malaysia. Basically, all countries is the same thing happen. Right, Malaysia is
It's a
not
global
a big
trend.
technology
Yeah, yeah.
country anyway.
Like a
So,
global upward
so
trend.
you see, is it similar compared to the scenario we have today? It's nothing similar because you see the rally in Malaysia today, mostly technology company. If you look at their underlying numbers, actually, they deliver 20, 30%, even 50% top line and bottom line growth. You mean our market remain rational today, mostly driven by fundamental and only concentrated on certain big highly fundamentally driven company. See, if not go down yet to what I call small cap exploitative company, you look at Malaysian technology company, nothing, almost nothing move out, right? Oh, everybody still, most investor that invest in Malaysian technology company, Sinlaya still underwater, right? So you can't, I think scenario today is far, far compared to what happened in 2001 and 2002 lah. And the second thing I want to address is you mentioned about large technology company continue to become dominant lah. You see over the past few years, right? I think last year, last year Meta was aggressive. They're buying Scale AI. In fact, recently they bought Manus AI. So they have resource to spend money. So then you look at Google. Google recently announced they buy WIX. Basically, this one is a cyber security company. They do integrated vertically. Then Nvidia also bought another company called Grok. Grok basically potentially become their competitors. So AI company, technology company in globally, they have making ton of money in the past, and that money they have it to buy competitor to actually complete their value chain. That's why you see our investment strategy continue to stick largely into this technological leader. I think the winners become bigger because of this reason. They have all the technology, they have all the people. Basically, they can Meta can pay Alexander Wang 100 million
Yes.
US dollar. See, so it's very difficult. If you set up another company, your main incentive today just to flip it to big tech company. If that are the biggest IT strategy that you might have lah.
Okay, so drawing back, you see all these big companies buying up smaller tech companies, even their competitors to a certain point, right? And that shows a sign of maybe dominance or bigger spending power, or how they monetize and how they sort of rally on partnerships, right, and collaborations. So saying that, how in this example, how would you translate this into an investment strategy, knowing that all these big companies are starting to buy up maybe smaller tech firms or even buy the competitors, right? How does this lead to a sound investment strategy from an investor perspective?
Okay, basically, you want to see investment strategy that we embed into MYTHEO, that we actually put it very clearly when we launch what we call MYTHEO Istiha back in July. In MYTHEO Istiha in July, we actually three things. Two things are very related to what you have said. Okay, first, over the past few years, you must always invest in the growth company. Growth tend to outperform any other team in the market, including value team, small cap team, or even dividend team. That's the first one. The second one that we see actually big getting bigger. So you can see based on our study that we do a lot of study, we find that company that are big continue to grow organically or through acquisition. The only reason because they have all the research to invested. There's not many people have something like 20, 30 billion money to be invested, right? Now everything getting very expensive. Recently Samsung and SK Hynix jointly announced they want to raise price for high memory bandwidth by 100%. Small company cannot afford to actually to
Can't afford
invest
it.
in kind of highly inflated prices. So I think the best sense is continue to stick the company that has shown leadership, to see the company that continue to actually what I call have very long track record of execution. Management is very important.
So in summary, maybe you can share, so right, just a quick summary. Do you think that the pie is getting bigger, or companies are buying smaller pieces of pie as a market? Right, if that makes sense. So right now, let's say your key players are Meta, OpenAI, yeah, that right. How do you think smaller tech firms are able to enter this space, or even is there a space for them to enter?
Okay, basically, if you look at small firm, they need to find like anybody else. They need to find a niche, right? Scale AI doesn't sell their company for 14 billion. They start also from scratch, right? They need to find a niche. Need to find the segment that actually the big technology company actually tend to overlook lah. For people, maybe there's a lot of things you can do, right? Basically, that the thing that you need to be more nimble. If you look at this, mostly if you look even at the small company, even in China or anywhere, they started for the person that already started work at the big company. They came back to their country, they start establishing this small company. In fact, Gronk was started for someone from Nvidia also, right?
Yeah.
If you look in China, I don't know whether you follow China quite recently. China have this four company called the Four Dragon.
The four dragons.
The Four Dragon.
Yeah.
Two was listed last year, and they all went up more than 500% in the first day of listing. The two company, Meta and another one called Morse, was basically both started by engineer from Nvidia. There's another two coming up. One company is called, I think, Abiran, and another one I can't remember. It should be listing also soon. The biggest difference, the first two company, Meta and More, was listed in, I think, in China mainland, basically Shanghai or Shenzhen Stock Exchange lah. But the two company, Biren, will be listed in Hong Kong, and another company also listed in Hong Kong. It's quite interesting because if this company grow, sooner or later will become part of MYTHEO, depend on our
Yeah.
will definitely will catch up this company.
Yeah, throwing in that portfolio analysis there, right? This is very interesting. So I guess it's not so much as the pie getting bigger, it's how many players are entering into this space. It's very much still open season, open space. So as we move into the last sort of segment, we gotta talk strategy. Strategy and positioning in 2026. As you mentioned at the start, the strengthening of Malaysia ringgit, is this a cyclical event, or does that offer a strategic entry point for investors to then come in and like, oh, US-based global assets, better value, great value now that the ringgit is strengthening against US dollar, right? And we see showing this significant strength right now, and moving into 2026 as the year goes on. How should local investors, Malaysian investors, view this from a cyclical perspective?
Okay, basically, first I want to address why actually ringgit is strengthening. Basically, what you see today, ringgit actually going down below $4, right? $4.
$3.99.
399. The last time you saw this 399 is way back in 2018. No? Okay, the first thing I want to highlight basically for global investing, if you invest in equity, basically ringgit, basically movement of currency basically should be neutral for one big reason. Okay, basically, even though MYTHEO actually invests in US ETF, right, but not the underlying of the ETF, not necessarily US company. We also have exposure company like Korea, as I mentioned earlier, Taiwan, South Africa, everything. They are quoted in their own currency. They are currency, most of them also last year actually strengthening against US dollar. That should be reflect into MYTHEO equity portfolio performance, such as MYTHEO Growth and ESG portfolio. And the second one also, MYTHEO did invest in US company, but US company is unlike company in other country. They are mostly global company, right? Imagine company like Microsoft use a lot of Microsoft. Basically, Microsoft always quoted me in ringgit, right? So basically, Microsoft, I think last year Microsoft I did what I call family account. They charged me 500 ringgit. 500 ringgit translate to Microsoft larger amount in US dollar, right? That actually basically because my company actually reported revenue in US dollar, you reported higher revenue, so that already drive their valuation higher. That already reflect in the share price. That's why you can see most equity company actually natural hedge. I mean they have component even though this currency move out, this currency move down, they're basically currency neutral. The second thing I want to highlight, we have inflation hedge portfolio that invest significantly in commodities. As I mentioned earlier, commodities and US dollar is just like oil and water. They cannot mix. So when one goes up, the others goes down. Basically, you can't expect to gain from commodity without having US dollar going down because people invest in commodity because they want more risk, they want pro growth as a class, and you want to invest here because of defensiveness. So most of the time, when you benefit from rising investment in commodity because during the time where US dollar is going down. So basically, our inflation hedge portfolio benefit from lowering US dollar if you strip out if you put the translation effect into the place. The only issue that we have basically is our income portfolio. Basically, our income portfolio do invest in what you call government bond and corporate bond in the US. So basically, there's no natural hedge there. So there's direct impact to your bottom line. Basically, if US dollar down by 5%, you got hit by 5%. So, but one thing I want to comfort you because we doing global investing. Our income portfolio don't only buy only US asset. We also buy emerging asset. Inside our income portfolio, we have certain component that invest into Malaysian bond, Indonesian bond, Brazil bond, Philippine bond. That actually partly cushion the impact of weakened US dollar. That's why I say strategy wise, you can see that you no need to think much about equity portfolio, right? Equity portfolio always been naturally hedged again, and our inflation hedge portfolio commodities actually tend to be positive when US dollar going down. Only the income portfolio actually slightly negative because of weakened US dollar. So the best way is to combine all the three. Then one you get the best benefit of diversification. We have broadened asset class, so your return and your performance of your portfolio tend to be more smooth.
Okay. So speaking about your point about hedging, right? I would then assume that based on what you explained, is not to say the best, but also why shouldn't a Malaysian investor, local investor, just stay domestic, given the strength of the ringgit now against the USD?
Okay, firstly I want to highlight that, okay, as I highlight before, Malaysian market is quite small. There's a pocket of Malaysian market that interesting to global investor like plantation or Dyson value chain invest and promote Malaysian market to overseas investors. So not all Malaysian players actually benefit from strengthening of ringgit. Exporter, of course, take a hit. So every country have two sides of coin. Strengthening of ringgit doesn't really benefit the whole country. Tech company, they export. Manufacturing company, they export, they will take a hit, right? So, in order to avoid what I call one-sided currency impact, you have to invest outside Malaysia, right? So that you benefit in whatever market scenario, regardless whatever the market movement is. Second thing I want to highlight is basically our algorithm. You can see that 2025 and 2024 are very different years. You can see that 2024 we don't have Donald Trump, we don't have tariff, we don't have any war. Our algorithm work perfectly in 2024. 2025, we have a lot of things that, as I mentioned,
A lot of global
that
events.
means our algorithm also always work. Our algorithm always focus on broad asset class and always monitor what I call universal momentum. We focus on maximizing profit based on the risk profile. So every single asset class have this price. So when they have price, they have what we call risk and volatility. That's why our algorithm is focused on this. Why our algorithm work to all asset class, work across all different time, so work across all different markets.
So the key here is diversification, which is what MYTHEO is all about with your various portfolios, algorithm-backed investing, and the gold standard, which is, well, your number one omakase. Right? It's everything we've been talking about so far. So I think I want to close out by maybe asking you again, right? What you think, in your opinion, the single most important piece of advice for investors, like locally, or to stay disciplined, judging by last year's 2025, we had so many chaotic, market-changing, market-shifting events. This year, again, might be just as unpredictable with everything that's happening right now. Like, what is the one thing that you would say to keep investors grounded?
Okay, you must very focused, very disciplined, and stay what is your objective is. So try to avoid reading too much into the headline because headline tend to be deceiving. Once you start to follow the headline, it give more harm than good to you. So I think the best way for you is continue to invest based on what is your appetite toward risk, right? So that you invest in all different asset class, and the best way, get a professional fund manager to do it for you lah. If you actually don't have time, and MYTHEO provides such of the service lah. So MYTHEO service is very easy to use and it's very practical. It's cover all over asset class. In fact, we have asset class that most other fund doesn't have in Malaysia. For example, silver and platinum. We also have exposure into renewable energy market that not really popular among Malaysia fund manager, such as Canada, South Africa,
Emerging markets too.
that did well last year.
So that takes us to the end of this episode. I'm sure we covered a lot of topics, a lot of
things.
thought-provoking questions. I really like how we talked about different market movers, different investor behaviors, what happened 2025, 2026. So if you like what you see, don't forget to share this with a friend who may need a fresh outlook or an investment strategy looking into 2026. And also, don't forget to download MyTheo, available now on the Google Play Store and the App Store. And thank you, Amir, for joining us. We'll see you in the next one.